And good morning, everyone. John Hutchinson and Jeff Wood for Breakfast Club this Wednesday, September 24th, 2025. Hope everyone's having a great Wednesday morning. I'm going to go off track a little bit with some follow up from the just concluded AI2 Summit. And anyone attending this morning, thanks again if you were part of that. Really enjoyed having a chance to really bring the entire thesis of AI2 to you. But I have some more details, so I'm going to share a little bit more with you this morning, and give you a sense of where we're headed and working on, or what we're working on rather. In over the last several days, I've been working on essentially a scoring system, not a ranking system, but a scoring system, taking into account different factors and the companies that are currently building the index. And the first thing that happened is actually had 12 additional companies that I've incorporated in. So the total on the index now is 150 companies. But the purpose behind the scoring system is to separate the best potential investments from, I don't want to say the worst, but the not best potential investments. And so the system that has been developed will score, weight, and validate all of the stocks in the index, all 150 stocks, and you can sort of see this distribution of the current scoring. I'm still going through a couple of metrics to see how that impacts things. And as we announced yesterday, the new AI2 Insider program, when we're looking at long-term long-term stocks, right now we have about 30 stocks right here, which are in the highest, which have the highest weighted scores. And so that's where we're going to start. Our research analysis is going to start with those 30 companies. And then over time, we'll work our way down the list, so to speak. Looking at companies that are in the 70, 79. This does not mean that they don't belong in your portfolio. There just may be a component to the scoring where the company was weaker than a company that's in the 80 plus category. And the watch list all the way down here, that could be any number of factors, and we'll take a look at a couple here in just a minute. But I'm really, really, really excited about the scoring approach here, because it gives a different validation to just having a bunch of names on a list. So the methodology and the components that I've been building into this system, to the scoring system, include AI revenue. That's essentially assessing whether or not the company is deriving direct or indirect revenue from artificial intelligence or artificial intelligence. It could be software platforms, hardware, in the business itself, et cetera. So a key component here is, how is the company deriving revenue from artificial intelligence? And the second is on enterprise or even consumer adoption. It's essentially looking at who are their customers. So a company that has a broader base of, we'll call it enterprise adoption, would have a stronger score than a company that only has, for example, one customer. That's just a brutal example, but just to give you a sense of how I'm using that. The third component is what I'm calling disclosure strength. For example, uh, when we take the transcripts from earnings calls from all 150 companies, are they specifically referencing artificial intelligence, or AI initiatives, AI products, AI services, uh, revenue, or other components to the business and operation that are linked to or derived from artificial intelligence? So that we know that, or we at least can assess how deeply ingrained the company is with and aligned with artificial intelligence. The fourth component here is monetization clarity. That is, how clear is it that the company is deriving profits or revenue and profits from artificial intelligence? And then we're building in some more fundamental factors like earnings per share and revenue growth, so we can project what the future holds for the company. What are the growth rates? What's the strength of the growth? Or how strong is the growth? So a company that has a higher 3 or 5 year earnings growth rate is going to get a better weighting than a company that's weaker in those types of categories. That also includes what I call earnings transition, which is many of these companies, because they are early stage companies, still have negative earnings. So part of the scoring here is how quickly will those earnings transition from negative to positive, and the sooner the better, right? So if a company has a 5 year timeline on turning profitable, that's going to get a lower weighted score than a company that's expected to turn profitable from the current fiscal year to the next. That's a simple explanation on earnings transition. And we're also keeping an eye on companies that transition negatively. So if a company was generating strong earnings and then suddenly has significant slowdown or decrease or decline in earnings projected, we want to know that too, because those may not be the strongest or best companies that we want to invest in as part of or as a function of this index. And so it should not be a surprise that the two of the leading companies in the index right now, based on median scoring, are in the software realm. Oh no. Are in the software realm. That's software infrastructure and software application. And the median scores there are very high. And most of this is dominated by technology. So semiconductors with a median AI2 score of 72, 72.3 if we need to be exact. But that shouldn't be a surprise either, in part because, as I talked about during the summit, we're looking at really three different types of companies. And I classified them as companies that have or rely on old technology plus new technology. So, for example, NVIDIA is actually a perfect example. NVIDIA's newer chips, which are driving artificial intelligence growth, are not their only chips. Right? They still have older chips. In fact, DeepSeek, which was launched back in January as a competitor to ChatGPT, built their model on older generation NVIDIA chips. So their DeepSeek's claim, and the reason that they disrupted the market back in January, was that they had built a faster competitor, faster and better competitor to ChatGPT that cost less. That was their claim in the PR function. Um, so it's not a surprise that many of these companies might have a what would look like a lower score, but it doesn't mean that it's not a company to be invested in. It's simply, where does that company's artificial intelligence revenue come from? And as a company like NVIDIA or other semiconductor companies begin to or continue to transition to newer, more powerful chips, uh, I would expect that those median scores will start to rise as older chips, older generation chips get furloughed, we'll call it, laid off, as they disappear from the market. So uh, what I'm seeing right now is the validation of the development of this index based on these scoring metrics, and the software market, right? That is the core of the thesis of AI2, whether it's software infrastructure or software applications, because that's how we get artificial intelligence to the business community globally, right? That's the businesses have to have a function to use artificial intelligence, and that function is fulfilled by software, either infrastructure or applications. So there's a method to the madness, and it is gaining more clarity by the day. I wish I would have had this completed during the summit. Unfortunately, the data model that I built took a little longer to run, and fortunately, it finished at about 4 a.m. today. So I was able to build some of this in. So if you attended the summit, a little extra meat for you. And I talked about some examples of how things impact a company. And two of the companies that I referenced yesterday or Lifetime Fitness and Lemonade. And Lifetime Fitness is technically in the index because it derives indirect revenue attributed to an AI initiative. They recently rolled out an artificial intelligence health platform, which does everything from personalized workout schedules, nutrition supplements, and other health related or other aspects of health related to the fitness industry. But that AI initiative is not the primary source of revenue for Lifetime Fitness. It isn't, so it's indirect in that it serves as a retention model for their membership base and for their recurring revenue. So it's not their primary source of revenue, but it does affect or impact their primary source of revenue by preferably leading to higher retention of their membership base. On the other side of it is this coin is a company called Lemonade. The stock symbol is LMND. That's Larry, Michael, Nancy, David. Now, Lemonade is in the insurance industry, property and casualty insurance. They are one of the first companies to bring artificial intelligence to the insurance industry. And as an agent, right? Essentially, you can do all of your insurance directly through their artificial intelligent agent. Or maybe it's not artificial, not intelligent. I haven't tried it yet, but you can do home, auto, I think it's home, auto, boat, and pet insurance. Yep, cats, dogs, goldfish, whatever. But they are a disruptor, but they're still early stage. And so one of the reasons that this company, Lemonade, wound up with a lower weighted score is the company's not yet profitable. So the fundamental impact, the financials impact, weighed it down, brought the score down a little bit, even though its revenue is directly attributed to artificial intelligence. And its entire business model is based on or built on artificial intelligence. But it's also weighted in a sense because they are in a very competitive space. And that means that the company has to achieve higher and faster growth rates. Excuse me, if Lemonade does that, and they are expected to make that transition from negative to positive earnings in the current year, then that score is going to start to rise. So one of the factors in the development of this index is the ability to watch how companies shift over time. That is one of the functions that will make it a dynamic index. A company could move from the lower end, the watch list end, up to the core, or up to the second or third layers here that we've developed. So some of the data models are still accruing information, especially on the financial side of things, because we have to get earnings transcripts, earnings data, SEC filings, et cetera. So a lot of stuff going into this that's still processing, but the early scoring, what it really tells me is that the AI2 thesis is aligned correctly with the stocks that are in this index right now. And as I said at the outset, the core group will be the first group of companies. That was 30 companies right now. That may shift a little bit when I get the financial data finalized and weighted in here as well. But the first pass on this, I'm really excited by being able to narrow this down from 150 down to 30 right away, and then say, okay, of those 30, here are the top 10 or the top 15, and then focus our research in that way in the new AI2 Insiders program. So for those of you who joined last night, or for those of you who will join the rest of the week, really that's where we're going to start next week. So the and the last thing is watching for companies. Like I said, is they can change from a lower to a higher category weighting. or from a higher to a lower, right? So seeing these changes over time uh, gives us a way to measure whether or not these companies should be in our portfolios first and whether they should remain there. Right. So another function beyond just price action or just the chart is if we see something changing, then we can adapt long-term or medium-term portfolio approaches and say this is the time to take money off the table, or even this is the time to increase exposure because the scoring and the fundamentals or the revenue attributed to AI is increasing. So as a company gets more and more powerful over time, then that can be a signal for us to say we need to have more exposure to this company versus a company that may get weaker over time. So where we would want to say either reduce or eliminate exposure to that company. So again, thank you to everybody who was able to be part of the summit. We will hold another summit again in the very near future. But things are exciting, and I'm really excited about where we're going with this. So with that, that's a quick overview of what we've accomplished on the AI2 Index. Jeff, do you have a good deal of data to share with folks today as well?
Yeah, I mean, I've just got a couple of slides and a couple of trade ideas. So,
Well, let me turn it over to you.
all right, here we go. Good morning, everybody. Um, excuse me, no matter how much coffee I have, I still, as soon as I start talking, that's when it all goes to. Okay, so we have a recap on economic news. This is something that we shared on Monday. We started looking at the week ahead, especially for those who love trading those zero DTE options. Um, and you know, it's been interesting. I mean, we actually hit new highs, but still everyone, especially in the news, financial news, is coming out and saying, I don't know, the market's going to crash. I've seen so many of these things that says like, this is 1929 all over again, all this other stuff. Um, but if you look at it, one, we had triple witching week last week. We talked about this on Monday. Is after triple witching or triple witching day. After triple witching day, the following week tends to be more volatile as everyone resets, all the hedge funds and everyone resets their risk portfolios and everything else. So we knew that this was going to be a little bit more volatile. On Monday, really nothing. There was a couple of speeches. On Tuesday, we did flash manufacturing PMI missed its forecast, but by nothing. Flash services PMI missed its forecast by 0.1, percent. Like that's nothing. The Richmond Manufacturing Index, okay, that came in a little bit less than expected. So, you know, I understand that the market hasn't been going straight up this week, but there's just a couple of economic things that kind of missed. I think there's a lot of volatility priced into Thursday and Friday. We have some of those are a little bit more major reports than what we had earlier in the week. But I still, I would we're still looking at the trend to continue for now. The other thing I wanted to show you, in maybe this is a little hard to see, we can maybe zoom in on this, but the new 5-day highs are outpacing the new 5-day lows. So even though, yesterday might have been, we'll go out to charts in just a second here. But there's, yesterday started off good, then kind of, fell apart a little bit towards the middle to end part of the day. But either way, there's still more 5-day highs than 5-day lows. There's still more 1 month highs than 1 month lows, still more 3 month highs than 3 month lows, and so on. So we still, and even though yesterday, what did the SPX do yesterday? Dropped a little bit by what, 40 some points or so. But look at yesterday, there was still the number of declining issues only outpaced advancing issues by just a little bit. So I think what you're seeing more in the SPX, or what happened yesterday, is a little bit more rotation out of, or continued rotation maybe out of some of the Mag 7. We have some legal issues going on with Amazon. We have some, other stories about Google and ChatGPT, whatever. So I think what you're seeing is a little bit more rotation, continued rotation into some of those smaller caps that have been lagging behind the market rally. And that's what draws the SPX down, since the SPX is so heavily weighted to the Mag 7. So it draws the SPX down, even though the number of overall advancing and declining issues in the New York Stock Exchange were near even, and we still have more 5-day highs. So to me, um, what I'm looking for, and it needs confirmation, is that we still have market breadth to push this market higher. It's just taking place in other areas besides some of those mega, I don't know, we got to come up like Alta caps or something. Like mega caps just don't seem to fit, some of those. Anyway, so looking at the S&P 500 index over the last 5 days, just wanted to highlight some things. S&P over the last 5 days, 0.76. Obviously, that went down from yesterday, but utilities are now coming up and outperforming the S&P 500. In industrials outperforming. So again, that we're talking about that little rotation that we're having. But information technology still hanging on, plus 2.44% over the 0.76. So, but what we're not really seeing is, if we really worried about something major shift, we would see sort of that rush to those defensive stocks. Consumer staples, yes, it's improving since what we talked about on Monday, but we're not seeing this like rush into consumer staples. Maybe, you could argue utilities getting a little bit more defensive. But we'll see how this continues to play out the rest of the week. But again, I think we're just facing a little bit more volatility right now than a major market shift. But every day brings in new data, and we'll continue to analyze it. Somebody actually brought this up in our AI2 webinar yesterday, and I was talking about different moving average crossovers and whatever. And someone asked me, well, why not the 10 and 20? Why not the 10 and 30? Why not the whatever? So I'm an equal opportunity person. So I scanned for 10 and 30 SMA crossovers that just happened yesterday. So these are 3 stocks that had a 10 period crossing over the 30 period. Simple moving average, and both the 10 and 30 are above their 200-day simple moving average. So see, I can scan on lots of different periods for simple moving averages. But anyway, these are 3 that came up. EA Sports or EA Electronic Arts Gaming. They're into more than just sports, but their Madden football franchise, big money maker, just came out for the start of football season. So I'm not saying that everyone's rushing into the stock because of that, but they're certainly generating sales, and they're monitoring Madden football sales on all major gaming platforms. We did have EVRG, which is electric and gas company, and then Norfolk, yeah, NSC is a railroad. Those are really the only 3 stocks that had a 10 crossing over the 30 that happened yesterday. We did have a couple that happened the day before: CNP, ES, and Raytheon RTX. I will say that some of these have a little bit light liquidity on the options chain. So if certainly you should always do your due diligence. Just because they're listed on a sheet doesn't mean I recommend to buy them or anything like that. But I wanted to go out to some of these charts and just kind of look at it to see how just a very simple a simple scan, simple crossover strategy can work, and especially be amplified using options. But again, full disclosure, some of these option chains are a little bit light on liquidity. So let's just go out really quick to the charts, and then we'll get you out for the day here. Just gotta find my Zoom controls. And we'll go out to Thinkorswim. By the way, futures on Come on, thinkorswim. Futures look like slightly up, not by too much. Looks like Nasdaq up by 0.2%. Even though, some Alibaba, Micron came out with Micron beat earnings or had better earnings projections. Alibaba just committed more to AI spending. So there you go, John. Also shows that AI spending continues to dominate headlines. But so let's just look at a couple of these things really quick, like EA, Electronic Arts. I have I have my moving averages set up. You can see above here, the 10 above the 30. So if there's a green cloud, that means the 10 is above the 30. If it's a red cloud, that means 10's below the 30. If I zoom in really close, you can see that just yesterday we had an initial crossover of the 10 above the 30. So today that will start printing a green cloud. But if you look at the previous instances, let's see, since February, EA Sports has been on an uptrend. And so we have these little periods of these red clouds where price action brings the moving averages down to have a little crossover, and then they almost immediately revert higher. But not saying that it's going to happen this time, but in the last few times when the two moving averages cross to that green cloud and are moving higher, you at least get this nice little bump. Again, it happened here. It happened 1, 2, 3, 4, 5, 6, 7 days. So it may be a quick bump, but this one did move higher. This one we had a fresh crossover, moved higher. So again, have a fresh crossover. Will it move higher? Don't know. Can't guarantee anything. But here is, let's see if I have that analyzed. I do. October 24th, the 175 by 180 call spread. Pre-market going for $2.15. And I know we don't do a lot of call debit spreads in Traders Reserve. That's why I'm doing it on Breakfast Club. Give you something that you're not used to. But this is going for 215. It is a 5 wide spread. So that means if EA crosses and stays above 180 by October 24th, you get max profit of the debit spread. And if you pay 215, your max profit is the width of the spread minus the 215 debit. So the max profit on this one is $285, providing that EA stays above 180 by October 24th. That means you have an opportunity to double an opportunity potential, nothing guaranteed, but you have an opportunity to double your money. $215 per spread could yield $285 should everything continue the way it's been going for EA. So just wanted to show you that. I guess we can go, what are we short on time? We got 2 minutes. I'll go over EVRG next.
I don't think anyone's going to kill you if you go longer.
No, maybe not. All right, so EVRG, this is, and this is actually, it's funny. Someone said, well, why don't you use, someone last night said, and it was just, it was a good question, but like, why do I use the moving averages I use? Some stocks react better to different moving averages. I know it sounds really weird, but the 10 and 30 for EVRG, you can see there's a lot of these like little crossovers, and you could argue that this has continued to be in an uptrend. But if you just took, like a bearish crossover on the 10 and 30, in almost every single instance here, I'm guessing you would have lost. So some stocks react better to a 10-30 moving average. Some stocks react better to a 20 and 50 moving average. You just have to kind of play around with the different moving averages for that stock and see, which moving averages does it respect and which moving averages maybe not work best for it. But anyway, EVRG, again, this is one of those where 10 crossing above the 30 and sort of pointing up. If we zoom in really close, the 10 is pointing up, the 30 is pointing up a little bit. Certainly helps after yesterday's big day on EVRG. But in this case, actually, the crossover, the 30 was pointing down. As soon as it flipped up, the 10 pointed up. Then you have a period of 2 weeks or so where you had some strong momentum to the upside. Sure, it pulled back a little bit, used that 30 period as a support, and then continued its run up. If we go back in time, 10 and 30 crossed here, moved up for what, about 2 weeks, just kind of guessing on that one. This one, 10:30 crossed, you had about 5 days of a big move. And then I don't know what happened on that big red bar, but going back in time, 10:30 crossed, and you had a good solid month of strong move upward. So again, on EVRG, going out to the October 24th. Nope, that's not the right one. Sorry. On EVRG, let me go back to my slides. What did I pick for that one? Oh, it was just the 21st November call. Oh my gosh, come on. This one doesn't have weekly options, so just went out. What is going on? Hang on. Everything is
Who knew options trading was so hard?
right. Why is this? There we go. Oh, get that thing out of the way. So this is what I was talking about. There's not a lot of open interest on going out to November 25 on EVRG. So, maybe this is a stock play um, versus an options play, but just the 7250 long call there, looked good to me. A little bit light on open interest. You could go out to the 75, just 75. I would watch out for that bid ask spread of 105 to 380. And then, yeah, so I think that's kind of it. You can see the other ones, the ones that crossed over yesterday. CNP. Um, we had a big, nice bullish move yesterday. It's bringing the 10 and 30 to cross higher. So center point energy, ES was one that, we had a nice cross yesterday, and that I'm sorry, 2 days ago, and then it continued its cross, or it's continued its strong movement yesterday. And then RTX is yeah, that's another one that we had a little pullback consolidation, and then now we got 10 and 30 crossing above 2 days ago, and we're moving higher on that one. So there's 6 stocks that you might want to add to your watch list or trade, or if you're an option seller, then convert that into an options selling play. Maybe you look for this area is a line of support, and so maybe you want to sell the 156 by 150 option spread. A lot of different ways that you can play that, but 6 different tickers for you to look at on this Wednesday, and that's it.
All right, so let's see. Once again, just the quick update in case you came in late. Uh, we've added a new scoring component to the AI2 Index, which will be coming out soon. And what that's allowing me to do is to create categories here for the investment potential of the companies that comprise the index. I've added 12 more companies, so the index is now 150 total names. And as we kick off the AI2 Insiders next Monday at 4 p.m., I will take you inside of the scoring, this sort of the distribution of the scoring, and what each of these categories mean, how we'll be attacking them. But as I said at the outset here today, we're going to start right up here with the highest ranked or highest scored companies, and to start building investment ideas based on those companies, and then we'll just work our way down and have much more for you. So thanks again for joining us this morning. We'll be back next Monday at 8:30 a.m. With your next Breakfast Club. We have Income Masters, I believe, at 12:30, a Millionaires Trading Club at 11 a.m. A quick program reminder that in 2 weeks, October 6th, Monday, October 6th, we have the first pre-session for the Millionaires Trading Club live event taking place October 21, 22, and 23, live from Las Vegas. So the first tactics session will be Monday, October 6th at 2 p.m. Eastern Time. And then we'll have a second tactics session a week later, October 13th, also at 2 p.m. We will have scheduling out for that for those of you attending the Millionaires Trading Club conference, and other details as needed this week. So look for that email. For Jeff and everyone else here at Traders Reserve, I'm John Hutchinson. Thanks for joining us this morning for Breakfast Club. Replay will be up in just about 5 or 6 minutes. Outside of that, have a great Wednesday, and we'll see you in your next live trading session.